Hi, welcome to Forex In Four. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is Friday, May 6, 2011. This morning I'm talking about the commodities collapse that happened yesterday. Now, before we get started here, I just want to let you know that we're doing the video a little bit later this morning because I want to try and pick up some of the action that's going to come out right at 8:30 Eastern Time for the U.S. non-farm payrolls report. Now, this is one of the most important economic reports out there for the economy because it shows whether we're growing or not, whether jobs are being created, things of that nature. Now, we had two just back-to-back bad economic reports as far as employment goes, with yesterday's initial jobless claims being a really bad number, and the prior day's ADP report missed expectations. So this morning we're expecting to see a gain of the consensus 185,000 jobs, and I think anything less than that obviously is going to be negative. But we're going to have to see what happens here because when you think about what happened in the markets yesterday, we had two things going on. And I'm just going to show you here really quickly. Go to the 30-minute chart. Okay, you can see that the euro collapsed yesterday. All right, selling off extensively, up from 149 levels all the way back down to 145. That's 400 pips. That's a huge move for one day. It's about 3 times the typical normal range for Euro USD. So what we're seeing now is that yesterday the initial jobless claims were bad, but we also had Jean-Claude Trichet speaking, giving the policy statement from the ECB rate meeting, and he basically backed off and backed away from the interest rate hikes that everybody thought he was talking about. And to be honest with you, it sort of makes sense because if you think about where the euro was in relation to the dollar, we were just up under 150. And you know what? None of these central bankers like to have a very strong currency. They want to have a stable currency. So if he comes out and says, yeah, we think we're going to raise rates, boom, all of a sudden euro's up over 150, and that makes it harder for their exports. So by being able to jawbone the dollar a little bit lower, or excuse me, the euro a little bit lower, all right, if he does come out with the eventual rate hike, say next month in June, or people are saying more probable in July, all right, he's going to start from a lower point and it's going to move up. So we've got the non-farm payrolls report just coming out here, and I just want to watch you. We're watching Euro USD here on the 5-minute chart, and to be honest with you, there's not a ton of volatility here. We're sitting just above 145. I want to wait and see here what this number is so that we can see where this market goes. But I imagine that we're going to see a big push one way or the other. It looks like a little movement back down under 145. Bear with me. Let's see what this report is. $244,000. Wow, that's a pretty good number. That's much better than they were expecting. So it's let's see what's happening here. We have euros selling off. So is this showing us dollar strength? This is interesting because I think part of the dynamic going on here is that there was a thought that if the data gets much worse, that the Fed may be continuing QE2 policies. But if the data is actually better, okay, then that's going to cause the dollar to strengthen a little bit because maybe that means that, in fact, Bernanke and company can back away from the QE2 policy. So it's going to be interesting to see how the market continues to react by the rest of the day, okay, because we also have to balance this with risk themes in the marketplace. All right, if we have the economy growing, then perhaps that puts the oil and the precious metals trade back on, all right, which would then cause a little bit of dollar weakness. So, we're sort of all over the board here, and you can see how right here with this nice big candle on euro, what's happening right there. So, the way that the market's reacting to these things is going to be varied going forward, but the general takeaway is this, is that if QE2 stops, then the dollar should appreciate because it was being held excessively low using the Fed's asset purchase program to keep it down there. But if they remove that, like they say they're going to, then that could potentially allow the dollar to strengthen, which means everything else would sort of weaken, which means we would have the commodity pullback. However, if we have expanding economies, then that also means risk on again. So that means that perhaps people will come out and they'll start buying back commodities, start buying the currencies. Okay, so there's a balance there that I don't think we're going to get the answer to today, but perhaps maybe we'll get a little bit more clarity this week. So that's what I've got this morning, folks. Keep your eye on this. Looks like euro's going higher, maybe holding 145. I think I'm probably going to buy some here. So that's what I've got. Have a good weekend to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.